All right, everybody, welcome to this week's episode of the Weekly Wealth Podcast. Before we get started, I have to talk about our social media. So go to Instagram, go to Facebook, and also to our YouTube channel. We are doing the best that we possibly can to get our message out to the world. Our podcast and our social media content is our gift to you. So really excited to have Thomas Cox with us today. Thomas is a financial architect and an infinite banking strategist. As the founder of Cox Capital, he's helped business owners and real estate investors deploy millions through private lending and IBC strategies that actually build wealth and protect capital. So, hey, Thomas, how are you?
I'm great. How are you?
I am getting ready for family to be in town.
That's right.
So it's going to be a great next couple weeks for sure. So now tell us, what part of the world are you in?
I live in Birmingham, Alabama, and grew up here and then moved away for about 15 years and then came back here in 2017. And this is home. My mom lives here. My dad's passed away, but he lived here. My sister lives in Florida, but all of my wife's family's here. So we're in Birmingham.
How far is Birmingham from Tuscaloosa?
45 minutes.
All right. So I live about 15 minutes away from a school that wears orange. And a couple times the orange school came out on top in the last few years, but yet Clemson had not has as good a year as your Crimson Tide did. So but college football is a big deal in the South for sure.
Very, very big deal. Yep. It's in where you're at and where I am too.
Yep, no question, no question. I think today is going to be a really cool episode because we're going to talk a little bit about mindset, and then we're going to talk about a couple different strategies that can help people to deploy capital and just make good advanced financial type decisions. So
Sure.
I am always fascinated by how wealthy people and honestly non-wealthy people think about money. And I think a lot of our results in life, whether it's fitness or it's relationships or it's money, it comes from first how we think, because how we think affects what we do, and then what we do affects what we get. So let's talk about what are some of the things that nobody taught us about how wealthy people think about money?
I would say this. The first thing is depending on where you came from. Okay. Everything's is how were you raised? Your religious beliefs, your fitness beliefs, your financial beliefs is where you were raised. I was raised super middle class. Both parents were school teachers and football coaches. And so I was raised to the finish line was retirement. My dad talked about retirement my whole life. So I was raised in that mindset. Well, I always saw my parents argue about money. And so I vowed never to argue about money. How people make money is absolutely astounding to me. The more people I meet every single day, and I'm like, you make money doing that? So for example, I got a text thread with these business guys that I'm with, and this was 10 minutes ago, so super off script. But there's a guy, he runs a business and he does Christmas lights from the last week of September all the way up until this coming up like the weekend before. And he absolutely kills it.
But what is he doing? He's solving a problem.
He is solving a problem.
And he's getting compensated. That's life. Like if you find problems, like something stupid like Christmas lights, you probably get paid a good chunk of money to hang Christmas lights, especially some little old lady. She can't get on a ladder and hang Christmas lights.
Well, and also too, depending on the market you're in, how big is this, how wealthy is the town you're in?
Sure.
There's a lot of people that have massive houses that they're not going to do it, but they want it done, and they don't have the time. Their time is more valuable than what the dollar that they're going to pay you to do that is. And so they do it. And like you said, solving people's problems is the way to make a living, number one. And if you can solve their problems, but then help them make more money, that's an even bigger linchpin. And that's what you and I help other people do.
Absolutely. Yeah, no question. So one problem that I think people have financially is they need access to capital and to buy things. So let's talk a little bit about capital. We have two strategies we're going to talk about today, but let's talk about private lending first. Is that sketchy? Is it shady? It kind of sounds like something that, is maybe a scam. Or is it just a legitimate strategy that's used by wealthy people?
It's a legitimate strategy that's used by wealthy people, but it's becoming more mainstream. A lot of what people think about investing is they think the stock market. They think that's the only way to invest. And here in the last, 4 or 5 years, something that's called alternative investing has made a been more mainstream. So what is alternative investing? Alternative investing is taking your money and deploy it in other ways that are honestly just outside of the stock market. So other than buying, ETFs or just buying, general Apple stock or whatever, index funds, it is taking your money and deploying it somewhere else. What does deploy mean? Giving it to someone else and them giving you a return on that dollar. Sometimes it's a fixed return. Sometimes it's a floating return. So what is an example of that? So we have what they call a private money fund. What we do in our fund is we take the money, we give it to house flippers. Someone that's taking the money, they're taking our money, they're flipping a house, they make a return, they make a spread, but in that spread, they pay us a rate on the dollar. In simple terms, we are the bank. Private money is all private money is private banking. So from Clemson, South Carolina, where you live, to Birmingham, Alabama, to Mumbai, India, the number one business on planet Earth is banking. You said at the beginning of the show, people are always going to need access to capital, always going to need money. So what are they going to do? They're going to go to somebody or something, an institution, and they're going to use that money because they think they can go make money elsewhere. I mean, a business loan, buying a home, buying a car. I mean, the list can go on and on and on. So private lending is using the money that you have, loaning it to somebody else, having them do whatever they want to do with it, and then them giving you a return on them borrowing your money.
Why are they not going just down the block to the bank and saying, hey, I want to buy a house and flip it, and I need $100,000 or whatever the number is? Why are they not doing that?
I get asked that question all the time. Here's the answer. Number one, we work with speed. We work really, really quickly. Okay. So if you call me and I know you, obviously the thing that I'm not saying is there's always a relationship there. There's always a me knowing David, me knowing Michael, me knowing whoever. Okay. But what happens is people in the construction world, in the real estate world, back in 2008, a lot of banks went under and a lot of banks had a hard time. And so from that point on, the underwriting and the approval of loans has gotten a lot more stringent, number one. Number two, it takes a lot longer. And in this game, okay, we've all heard this, time is money. Heard that? That's an age-old saying. So if Michael wants to borrow money and he has to go to a bank, he has to get underwritten. Well, what if he's got a lot of money out? There's so many factors in there. And say it takes 45 days, 60 days. We can move a lot quicker. Mike, I have a guy that can call me and say, hey, T, I need, $150,000 for this. Here's the date. Here's the address. I'll look at it, do some quick research and say, great. Am I first lien? Yes. Great. Look at the property. Yes. What's the ARV? Go. Obviously, it's a little more detailed than that, but I'm just giving you
now, first lien, that means you can take the property if they don't pay you back. Is that very simply what it means?
Very simply. So when your mortgage, David, do you have a mortgage on your house?
Yep, I do.
Okay. So let's just say your mortgage is with Bryant Bank. What that means is you pay a payment every month to Bryant Bank. You pay that payment to Bryant Bank. If you quit making those payments, David, Bryant Bank can what they call foreclose on your house. They can take your house from you. So with private lending, the house is owned free and clear. I am the bank, meaning our fund or me, I am the bank. So I give them, let's just use $100,000 because it's easy math. I give them $100,000. They go do whatever they want to do with the house. They fix it, they flip it, they sell it, whatever. And they make as much money as they possibly want to make. But I say, okay, David, you're going to give me 15% on my money. I'm going to give you 100, you're going to give me 115 back. They give me the $15,000 back, and then they may make $100,000 because they sold it for a lot of money. They may make $5,000. I don't know. As long as I get my return that we agreed upon, I'm fine. So me being first lien means that if something happens and he runs off to another country, I can take that house and I can do whatever I want to do with it because I, in turn, own the house.
Have you ever had to do that? Has it ever come to that? Or have you had any deals go bad or no?
It's a great question. So I've never had to take someone's house back personally. Now, I've had people that have said, hey, it's going to take me 6 months and it's taken them 9 or taken them 12. Well, obviously, at that point, the rate gets a little bit higher.
Sure.
So let's talk about a deal gone bad. So we did second lien. You know what second lien is?
That'd be almost like a home equity line of credit or somebody who's second in line, correct?
In a way, yeah. So first lien is the bank. Second lien is if you sold that house, the bank would get paid first. I would get paid second. You would get paid third. I did second lien on a couple of projects. and the house went into foreclosure and whoever was in first position took the money, second lien got left out. So
Gotcha. Okay.
I lost my money in those positions. Lesson learned, never do second position. Ever, ever. So if you're listening, if you don't get anything from this episode, if you're in private lending, never do second position. You have to have something to hold to be collateral for whatever it is you're loaning out.
Now, do both parties in private lending engage the services of an attorney? Is there a
Absolutely.
closing? Okay.
Absolutely.
So this is not just, you're handing me a paper bag with
No.
with $100 bills in it. This is a legal transaction with protections and everything else.
Title insurance, a deed, a mortgage is filed, and then once the money is given back, I have to I have to sign a lien release. So I have to sign a mortgage release saying that, hey, he has paid in full. It is now his house. But you have to have everything legal. I also require people to sign a guarantee. Now, personal guarantee is legal, but it can be maneuvered out in a bunch of different ways. But
Sure.
it's as much mental as it is anything for the person borrowing the money. We do all that, but yes, I use the same lawyer because he knows me and understands me, so that it makes it really, really easy.
Perfect. Now, and this sounds like a very win-win scenario for the right person. You're making money, in exchange for the borrower to use your money, and hopefully they make money as well. So it's a win-win. Are there less fees? Are you charging points up front? I mean, a lot of banks you're charging, on home loans, a point and a half. On commercial
Sure.
loans, probably more than that. Or are there some lower fees?
That's a great question. I get that all the time too. So I'm a little bit different in some of this stuff. So there's a handful of things that make our loans a little bit more attractive. Okay. So the first thing is I don't require any payments throughout the process of the loan. Let's go back to our $100,000 example. I loan David $100,000. David agrees to pay me back $115,000 in 6 months, $115,000. Okay. Number one, I don't charge anything up front. So I don't charge any quote unquote points. Number two, I don't charge any points on the back end, and I don't charge an extra percentage on the back end. I don't require you to pay me any payments, but my percentage is a little higher than normal. Is that making sense?
Sure, absolutely. And nothing's free. So, if you want no payments, you got to pay a little higher fee. That's just
Nothing's free.
the way it works. Yeah.
Here's the thing I think of. If David is flipping a house, during that process, you're not making any money. So if I require you to make payments to me, you are paying me with my money. Correct or incorrect?
Right. Yeah.
Okay.
Sounds right. Yeah.
So at that point, what are we doing? Let's just charge an extra little bit on the front end, on the back end. Let me get the percentage. Let you be a little bit more stress-free, because anytime someone's stress-free, they work a little bit better. Let you be stress-free. Let you just pay everything on the back end to me. It's extremely attractive. Whereas some people are 10 or 12, I'm 15, but I don't require all those things. We're obviously going to paper everything and everything's going to be great. But like, hey, here's your money. Go do the deal. Be stress-free. If you go longer than 6 months, it's going to be more of a percentage, but they give me everything on the back end and everything will be fine. And people love it. People love it.
Yeah, no, it's cool. I think it sounds like something that could really work well for the right scenario. Now, obviously, if I'm buying a house, I want a 30-year mortgage. That's not what you do.
Nope.
But short-term money, quick, easy. I like it. So that's a really interesting concept. And we've all seen the house flipping shows on TV, and I've heard them mention hard money and things like that. And I think it's a great tool for sure. So you also work with another type of, we'll call it banking. We'll call it lending. Let's talk from a 30,000 foot level, how that concept works for individuals as well.
One of the things that I do, spend the most of my time doing, is what they call infinite banking. So what is infinite banking? It is, let me say this, let me give a disclaimer. Infinite banking is not for everybody. If you are paycheck to paycheck and you are, pinching pennies at the end of every month, infinite banking is not for you. Infinite banking is for business owners. It's for investors. It's for high W-2 people. What is high W-2? Doctors, lawyers, dentists, veterinarians, C-suite people. Okay, it's for people that have excess cash. So what is infinite banking? Infinite banking is using your own capital that you've saved and allocated, but you've allocated that in what they call from a mutual insurance company, a whole life insurance policy. Okay. So you're having a whole life insurance policy, and we're buying as little of death benefit as possible. Whereas like with a term policy, you're buying as much death benefit as you possibly can. Well, the whole life infinite banking policy, I want to buy a little bit of death benefit, but with that death benefit, I want to put as much cash as I possibly can in that policy. So I'm having a death benefit, but I'm also adding cash in the policy. So I give that cash to the insurance company, and then I can then use that money in and out like I want to, just like a bank. Okay. So that's where I store my excess capital. So it is a savings account on steroids. And why do we do that? Well, the insurance company gives us a guaranteed rate plus a dividend, and the dividend grows the longer we have the money in there. Okay. I can use that money in and out, and it never goes down in value. So let me give you a great example. So if I'll give you a real life example. So I have a policy that has about $300,000 of cash value in it. I did a hard money loan to an individual, and I loaned him $200,000. But the whole time my value in the $300,000 is growing at my guaranteed rate. Even though I used $200,000 to give him, I'm growing on 300. I borrowed 200 off of my policy, gave him that money, and now he's going to give me a return. Does that make sense?
Absolutely.
So that's what infinite banking does. We put cash value life insurance on someone, they load it with extra cash, and they use that money in and out just like a bank. That's why it's called infinite banking.
One of the things that I think is a little bit of an issue in today's world is social media. I've had people actually call me, say, hey, I saw this TikTok video where I could get some kind of life insurance and I could lend money to myself. So I want to get $1 million policy, and then I can, buy a $800,000 house and pay myself back. Yeah, sure. That's not how this works, right?
Not at all how this works. Okay. So people
the
talk
death
about
benefit and the cash value are two totally separate things.
Totally different things. So people think they can borrow off of the death benefit. You can't borrow off the death benefit. Okay. Mm-hmm. So what we want to do is say, I want $1 million life insurance policy. No, you don't think of it that way. Here's how you have to think of it. How much money can I save and put into this policy per year? It's not a one-time thing. How much can I put into this policy per year over the next at least 7 years? Death benefit is so tertiary, David. It is just an added bonus. What we're doing is we're getting compounded growth.
Well, and now, but devil's advocate, you personally might need a separate life insurance policy specifically for death benefit, because if you passed away, your family might need a bunch of money. So that would be, maybe you might need some term insurance to leave a couple $1 million to your family. Yeah. But the infinite banking policy itself is not intended to generate a big death benefit. If you had another need for big benefit, you can fund that some other way.
A lot of people have both.
Sure,
okay,
absolutely.
So a lot of people have both. So, but like, for example, for my policy, for example, it's pretty good death benefit, but I also have term. I've got term insurance, and I've got the whole life, but I've got multiple whole life policies. I got 2 whole life policies on me, 2 term policies on me, and I've got a whole life policy on each of my kids. So I'm using a bunch of different whole life policies to store cash in different places.
Yep. No, I like it. And I also think kind of in this age of, social media financial advice, there are strategies that are kind of pitched as they are right for everybody. And you started off saying infinite banking is not right for everybody, because there's nothing that's right for everybody. And if you're someone who kind of is paycheck to paycheck, infinite banking you just don't have enough money to get into it. It's just not going to work.
If I'm talking to you about infinite banking, it's because I have some insight into your financial life. And if I'm talking to you, I think it's a good fit for you. I can tell after one conversation of 20 minutes sitting down with you if it's a good fit for you. If you've got loads of debt and you're paycheck to paycheck, this is not for you. But I'll give you a great example. We've got a guy that has a $700,000 HVAC business. He brings in about $700,000 or $800,000 a year. He pays himself about $60,000 a year. He's got 2 or 3 kids. His business is growing. He's got excess capital outside of what he pays himself. He is a great candidate for infinite banking. Why? Mm-hmm. Because he can store his cash in this policy, number one, and use it to buy trucks, to buy tools, to do upgrades, to do things like that. So he is perfect. Even though he doesn't make a truckload of money, he's in a position or has a business that can help fund these policies, put money in these policies so that he can use that cash for different things instead of just putting it in a bank. He's going to put it in one of these policies to do that.
Absolutely. No, I mean, it's a really good potential tool for the right person that can be beneficial. Now, I did a podcast maybe a year ago, and it talked about kind of, beware of social media advice. And one of my biggest things with social media is, it's very easy to say, this strategy, this product works for you. But like what you're saying, this works for some people, not everybody. And you're very careful to make sure that a potential client, fits the profile, which is a great thing. So there's a lot of TikTok financial advice out there that's way too overly generalized. So I appreciate that we're talking about, who this would actually benefit. So anybody who's thinking, you know what, this private lending sounds interesting, and maybe I do have a short-term need for some money on a house flip or anything like that, or they're thinking, I don't know, maybe I fit this infinite banking concept profile. How would somebody find you? What would that process look like? Do you have a website? Just talk to us about that whole deal.
Talking about two totally different things, but you can find me on both of them. So my website is thomascox.co. That's Thomas Cox, C-O-X .co, not .com. And I think in the show notes, we're going to put, if you want to know about infinite banking, I can give you a deeper dive. I've got a video series that we did, super easy. It's about 30 minutes. It explains everything about infinite banking. But we also have a private money section on our website that would just give you an idea of what you would want to do if you wanted to engage in that with us. And we're happy to look at everybody, and we're pretty selective, just to be totally honest with you. I want to make sure what we do is right for you, because like I said, you can't talk to everybody. Like you can't be everything to everybody. And so I want to be very specific with who we deal with. And because copacetic, back and forth, equitable relationships are so much better than one-sided things.
And the bottom line is both parties need to benefit. Both parties need to make a profit, or else eventually you go out of business. And profit is actually in my organization's guiding principles. Profit is good. We need profit. So if there's a deal that you can't make money off of, if you do too many of them, ultimately you're out of business and you can't do all the good things with money that money allows you to do.
David Oakley, who is a mentor of mine and a great friend of mine, does a massive amount of multifamily syndications. Wonderful, God-fearing man. Love him. He uses the term fair and equitable. He looks at me and he goes, hey, is it fair and equitable? Is it fair and equitable for you? Is it fair and equitable to me? Everybody wants the great deal. Let's just get a fair and equitable deal for both of us. That is the most important thing.
And then you could do a bunch of those, because that's if you and I are dealing together and we're both making a little bit of money, as opposed to you making a killing and I'm not, we could probably do a bunch of deals, and over time it could be a great relationship.
Great relationship. You're exactly right.
So anybody who's interested, go to www.thomascox.co and make sure you understand it's not .com, it's .co.
Right.
Yeah, so we talked about some of the things we were going to talk about on the show previously, but I always have a question that I throw at our guests that I didn't tell you about. So we got to put you on the spot here.
Perfect.
So we are the Weekly Wealth Podcast, and we talk about the mindsets, the tactics, and the strategies that can help you to build and maintain wealth. So Thomas Cox, what does wealth mean to you? What does it mean to your family and all the people in your life that you love? What is your definition of wealth?
Wealth is being able to do what you want to do when you want to do, and bringing as many people along the ride as you can. I really feel like God allows people to create wealth in order for them to give. Who is that give to? I don't know. I don't know who that give is.
And it's not necessarily to the homeless in Africa.
No.
It could be, but it could be just to give your kids a better life. It could be, just, you might know, you just need to write a check to the homeless shelter down the street. I mean, and I heard a saying, money is good for the good that money can do. Now, money's really not bad. Money can be bad. If you're buying a bunch of expensive crap to fund your own pride, so you feel like you're better than me, then maybe that's not a great use of money. But if we are using money in a positive way, it's literally a blessing from heaven.
The Bible's pretty clear. It says the love of money is the root of all evil, not money, because money is a tool. It is a tool that we can use for so many different things. And you're right. It doesn't have to be a homeless shelter. It doesn't have to be, somebody in Africa. It can be. And we do some of those things. But like, for example, my mom's HVAC unit went out. My mom does not have that dollar amount to fund that. I looked at my wife and said, hey, mom's HVAC, it went out. She's like, okay, are we going to take care of it for her? I was like, yeah. Well, We wrote the
That's
check.
just as important. Yeah, that's just as important as helping somebody else.
You gotta, it doesn't matter like, who you're helping, but you got to help somebody. And being able to be in that position to do that it's a wonderful freeing thing, but it's also a long process. It didn't happen overnight.
Yeah, no, I get it. I get it. No, and I think you and I are really on the same wavelength on the wealth issue. It's funny. I've probably asked maybe 75 people that question, and I've still yet to get a dollar amount. So nobody's ever said I'll be wealthy when I have 1 million or 10 million or 5 million or any amount of money. It's always every single 100% has had some version of freedom and do good for the world. So that's why I want money.
I will say this though. Okay. When I moved back to Birmingham. You know what BNI is? You ever heard the networking group BNI?
Yeah.
So we own 2 different catering companies here in Birmingham, and I was trying to promote the catering company. I was in this BNI group, and there was this lady in her 70s, and she had retired and was in the BNI group, and she had another business. And she got up and she said, one of my financial goals is this. She said, my goal is to be a 6-figure giver.
I love it. Yeah.
David, that is one of my financial goals. There is not a dollar amount on what I want to make, but I have a dollar amount on what I want to give.
I think that's important.
I'm telling you, 8 years ago, that was the what I heard, and I'm telling you, it is something that I've tracked every year since then. And every year I get a little bit closer and a little bit closer. I'm not quite there yet, but I'm really, really getting close to being able to say, and I don't want to say it from the rooftops, but internally being a 6-figure giver.
No, I think, I think that's a goal. And I think goals, even giving goals need to be measurable, or else you don't know if, you could say, I want to give more. Well, if you give a penny more than last year, you succeeded. And that's probably not what your goal was. So that's awesome. Right. Yeah. Well, super excited about this. This was really good information. Again, my goal and my guiding principle with my clients is I believe that how we handle our money should positively impact our lives and the lives of those around us. Yeah. And I think today we covered a couple strategies that can help our measurable financial success, but we also talked about just some theories on how do we do good for the world? How do we have fair and equitable business transactions? So really good stuff. Right. I'm glad that we did this. So
I'm too. Thank you.
Yep. So until next episode, everybody, I wish everybody a blessed week, and be on the lookout. I'm going to be on Thomas's podcast as well. So hopefully we'll give some good information there. Thanks, Thomas.